Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today I'll be speaking with Miss Gwen Preston, and she is the resource maven. With years as a mining journalist, this gave her a base of knowledge and a broad network of contacts in the metals and resource sectors. She has specific insight into which projects and pieces of news really matter in the niche. She knows what it takes for a project to advance along the exploration, the development, and the production path, and what opportunities each of these stages has to offer. She definitely knows how the metal markets work inside and out, both alone and with the overall global economy, and most importantly for my audience, how do you profit from the commodity cycles? Ms. Preston, thank you so much for coming on to my show today.
Well, thank you very much for having me.
Yeah, absolutely. I just want to get into your background a little bit. How did you become the resource maven? How'd you get into this niche?
Not by, it wasn't sort of a clear choice, but I think that's the case for quite a few people in the mining sector. My background is actually chemistry, is my degree, and then I did a degree in journalism, and I had started looking for work in mainstream media and decided that was a fairly terrible industry to be a part of, and ended up with a job at the Northern Miner, which is the world's leading newspaper that's focused exclusively on mineral exploration, development, and production. So I spent almost 6 years writing for the Northern Miner, and that was a job that took me all over the world and gave me the opportunity to ask people from the smallest explorer to the largest major questions until I understood what was going on. So it was an incredible place to learn the industry and to develop a deep network of people within the industry, to see all kinds of projects, all kinds of commodities. And I also did it sort of through the crazy gyrations in the market. The recession happened in the main markets, and it certainly happened in the metals markets. And so then I was part of that industry during the heydays of 2007 and then the real heydays of 2010-11, right. And then still through the terrible bear market that we had following. So yeah, I had done all of that. I also spent 2 years in the middle of that time away from the newspaper as a ghostwriter for a different newsletter writer for Marin Katuza, who was when he was still with Casey Research. That was an energy-focused investing newsletter, but it was still an incredible place to learn as well. Marin's a capital markets mover and shaker, so I learned a lot about capital markets, how deals come together, how to spot opportunity, how to move on opportunity. And then it was 2014, and I looked around and I thought the mining markets, broadly speaking, were at a bottom, and I wanted to be able to participate actively, proactively in what I saw was the coming bull market. As a journalist, I couldn't own stock, so I hadn't when I was at the paper. So I left my salaried, benefited, and pensioned job to start my own business at the bottom of a terrible market, and that was 2.5 years ago. Yeah. And it's been absolutely fantastic. I've just the market turned a year after I started the letter, and we've had a year and a half now almost of really interesting opportunity, the market coming back to life. It's been just exciting, and we've made lots of money. So yeah, I've learned a huge amount more. So I love what I do, and I'm always happy to talk about it.
That's fantastic, and we will be speaking about resourcemaven.ca, your website, and I'll put a link to that in the description of the video, as well as the Maven Weekly. But just wanted to talk about, I speak with people on almost a daily basis, especially online, about GDX, GDXJ, NUGT, JNUG, SLV, GLD, all the ETFs for for mining, as well as just the commodities themselves, gold and silver. Do retail traders, amateur traders, have any place trading these, or can they be successful, or is it just no pun intended, stacked against them?
So absolutely, there's a space. as long as a retail investor understands the broad context in which metal markets happen. And that is a very cyclical situation. So gold moves in cycles. It goes up for a few years and then it comes down for a few years in general. Copper does the same. Zinc does the same. Although, yeah, the metal market, the mining markets are very cyclical. So that matters because often the main body of retail investors don't really hear about investing in gold, call it, until the cycle is already almost done. So that's the risk for retail, is hearing about it, when it gets to be, I always say, when there's gold bars stacked on the cover of Time magazine, it's probably time to sell, not buy, because that's suggesting that we're getting into the, if you want to call it the manic phase, but we're getting near the end of the cycle. If, however, an investor is even just on a basic level connected to the industry, has insight, has found a way to get insight, or has found a way to follow the industry so they understand, broadly speaking, where we are in the cycle, as long as you're still in the first 2/3 of it, then there's a lot of opportunity, and there's a huge range of options there, from fairly low risk investment opportunities all the way through to the high risk but very high reward opportunities. So there's very much a space for the retail investor, as long as they understand big picture wise the context in which they're playing.
Yeah. And you mentioned as long as retail investors have access to that knowledge base. Well, one way they can get that is through resourcemaven.ca, as well as the Maven Weekly. What is the Maven Weekly, and what will people see, and what do you offer on your website right now?
Sure, thanks for asking. Yeah, so I write a weekly newsletter that tracks the mining sector. So I talk about the macroeconomics and where metals are positioned on a weekly basis. And I also, probably more importantly, talk about what stocks I'm buying and selling in the exploration and mining space. So it's a subscriber-supported letter. I don't take money from companies. Companies cannot pay for coverage in the letter. I just write about the stocks that I'm buying where I see opportunity to make money, and I write about why. I also talk about when I'm selling them and why, because of course selling is the more important side of the equation.
Oh yeah.
So that's Maven Weekly, is a weekly subscriber supported newsletter. I also have a premium service that talks about the other aspect of investing, which is financings. Of course, in the mining sector, I play predominantly in the explorers and developers. So I invest in companies that do not make money. They spend money, they don't make money. So of course that means that financing is the way that they fund their activities. So participating in financings is a really good way for the more engaged investor to increase their potential upside in these opportunities, probably through there being warrants involved in the financing. So when I learn about a financing opportunity that I think is good, then I secure an allocation for my premium subscribers and send out a note about what I'm doing and why I'm doing it, and invite them to participate. And that's partly important because the mining sector, the exploration sector especially, is a fairly small group of people. The movers and the shakers is not a huge number. And a lot of times the really good opportunities, the new companies coming together, the new management teams, perhaps a new discovery, those financings get filled up before the average investor has any idea that they're even happening. So the reason that I do the premium is to give the retail investor access to the financings that they wouldn't usually have a chance of participating in. So those are my two products. On my website, I have a free trial if you want to try it out. I have examples of articles that I write. I take snippets of the letter each week and put them up there. So, yeah, that's me, and that's what I do.
Yeah, that's great, because I'm looking at your website right now. I see a free trial button up there. I see videos. I see newsletter, Maven Weekly. There's so many resources on there. People should check that out. Again, look for the link in the description, resourcemaven.ca. I'm looking at one of your articles right now. What's up with zinc? Is zinc something we should be looking at? Because people don't talk about it nearly as much as the other precious metals. What are your thoughts on zinc right now?
Absolutely, zinc is a very interesting space right now. So zinc has for years been what I call the metal that cried wolf. So it was zinc. There was a lot of very large mines that kept the zinc market supplied, but there were decades of time during which zinc prices were fairly low. The big mines were established, they could make money, not huge amounts, but they could make money. But the low price meant that there was very little incentive for anyone to go out and explore for new zinc deposits. So basically no one looked for zinc deposits for a few decades. And then we got to the last few years and the current time frame when those big mines started shutting down. They ran out of ore. So zinc is actually in a significant supply crunch. Zinc demand basically just rises with population. We just need zinc to galvanize things, and that just increases as the world population grows. But supply is falling because there aren't any new assets. So I say the metal that cried wolf. People started projecting this supply crunch quite a few years ago. And so you'd always hear, every year you'd hear someone saying, this is the year zinc is going to, hit the crunch. And it didn't happen, and it didn't happen. Well, last year it really started to happen. And the zinc price gained, if you can believe it, 80% in 2016. So zinc really took off in 2016. Zinc stocks did very well. This is anomalous. The price has cooled off the reason I wrote that What's Up with Zinc article is the price has cooled off a little bit so far in 2017, but that makes sense, right? When something gains so dramatically, and we're not talking about a stock, we're talking about the price of a large traded metal. Yeah. When it gains so dramatically, it's natural for it to consolidate that to a certain extent. What I think it matters for the retail investor is that any zinc price that is around about $1 or above, which is absolutely where we still are, creates a really dynamic zinc equity space. So as long as the price is around about as strong as it is, we have opportunity in zinc stocks. And this supply crunch has not been answered. Sure, stocks have done well. There's explorers out there. But a year ago, you could literally count the number of zinc stocks. Like if you wanted to invest in zinc, the number of zinc stocks that were available to invest in a year ago, you could count on one hand. Now, they're coming out of the woodwork. You probably need all your fingers and all your toes to count them, but there's definitely still opportunity in zinc as companies race to delineate deposits and build mines to meet the supply crunch. So zinc is a really interesting space. The fundamentals are very strong, and I think this market is going to last a few years. So this current sort of pause, if anything, is an opportunity to get into a space that started to feel like it was running away from us last year.
Zinc, something I need to consider a little more strongly. But let's go back to the more popular gold and silver for a moment, if you don't mind. I've spoken with Andy Hoffman, Michael Pinto, Charles Nenner, guys like that, David Morgan, gold and silver experts, and I've heard some interesting price targets. I've heard $10,000 for gold. I've heard, what are your price targets, if you don't mind sharing? And of course, disclaimer, this video is not a recommendation to buy or sell anything. We're not licensed or registered investment advisors. You have to make your own decisions. Given that, do you have any price targets for gold and silver right now?
Sure. So my first statement is that if gold were to reach $10,000, I don't want to be in that environment, because that environment only exists when the US dollar has become completely debased, and the rest of the economic fallout from that situation is not a scenario that I want to live. So you kind of have to put these things into perspective, into bigger picture perspective. That said, so gold is currently, today I think it's $12.65. I think that gold will finish the year higher than it is. I think it will break 1,300 for sure, probably edging up towards 1,400. That's this year. In the next few years, I expect us to be in a gold bull market. Of course, there's lots of variables that will impact how dramatic that market is. But for gold to at least regain the highs that it got to in the last gold bull market, where it almost got to $1,900, very reasonable. And very reasonable to expect that. And so that creates good upside for those who own gold. But from my perspective, what it really creates is incredible upside for those who play in the gold stock game, because, of course, gold stocks lever those gains dramatically. Sure. Silver, my silver percentage gains would be even higher. So silver has, especially in the last few weeks, really underperformed gold. When gold moved a few weeks ago, when there was all the geopolitical tension around North Korea and sending cruise missiles into Syria, and gold really made its move there, silver has not followed that move, which has been quite interesting. I think it says a few things about gold as a safe haven, something that's not quite as reflected in silver. Nevertheless, silver, when the precious metals space goes on a bull run, silver outperforms gold. So its underperformance right now probably only exaggerates that eventual outperformance. So again, I don't know exact numbers for silver, but I would expect it to outperform, and again, silver stocks to probably outperform the gold space in the next few years. And one of the reasons for that, especially on the stock side, is that it's pretty difficult to find pure silver production from miners. Silver, at least half of the world's silver is produced as a byproduct from other mines. So it's a little bit more difficult to find that direct exposure. So silver stocks, for that reason, because they're a little bit more exclusive, tend to offer bigger upside. So, I mean, I started my publication, my letter, my whole business at the bottom of the market because I expect this to be a big market. So that's the whole basis of what I'm doing. And yeah, I wouldn't have started it if I didn't see pretty big upside in the next sort of 3-4 year time frame.
So you're recommending, not that we're making recommendations here, but you have a preference for the stocks, the ETFs, as opposed to the physical stuff. And are you a stacker yourself, and why or why not?
So no, I don't own much physical, and the reason is because I have all of my knowledge base is in gold and is in metal explorers, developers, and producers. I know that space intimately. So since that space offers leverage to gold gains, right, it makes sense for me to play in the space that offers the leverage because I can manage the downside risk. There's a lot of risk in mining investing, so it's clearly always present. But I can manage the risk because I'm so intimately knowledgeable with the space. So for me, the risk reward is better on the stock side. For those who are less engaged with the space, or who don't have sources of knowledge that they're 100% comfortable with, owning gold is always a good idea in a big picture bull market. So it absolutely makes sense. But I just don't do it myself because of my particular situation with what I know. And then when it comes to the stock side of things, that's a whole other conversation, ETFs versus individual stocks.
Sure, makes sense. Do you think that gold and silver stocks are something that everybody should have in their portfolio? Should we be hedging right now in these uncertain times and some might call it a rather toppy or frothy market? What do you think?
I think yes, because of sort of the first answer that I gave. As long as you're aware of the big picture of where we are in the big picture cycle, then that determines whether you should be buying or selling exposure to precious metals. And where we are right now is we're still very early in a new bull market. So from that perspective, I say yes, every investor should have exposure to precious metals. That exposure, what kind of exposure you choose completely depends on your risk profile. There's low risk options, there's high risk options. What I would say is that you want to make sure that you remain aware of that big picture cyclicality. In a few years' time, this market will turn down again because mining cycles always turn down. Like, it is the most reliable aspect of this sector, that it just cycles up and cycles back down again. So you want to have exposure in the bull markets and not in the bear markets. That's like buy low, sell high. Easier said than done, I get.
Yep.
But still, that's my big picture answer to that. And yes, I really do think that everybody's portfolio would benefit with at least some exposure to precious metals.
I tend to agree with that. And finally, because I don't want to take up too much of your time, and I really appreciate you spending this time with me today. We talked about zinc. Are there any other sectors or anything that is just underappreciated that people really should take a look at right now?
That's an interesting question. So it depends on your time frame, but certainly if your time frame is at least is several years long at least, copper has not really started cycling back up, and the more dramatic mined commodity that has not cycled back up yet is uranium. Uranium is probably not going to move very soon. Like, I don't think it's going to move in the next 6, 8 months, year. But the fundamentals are very strong for uranium. Uranium will make a move, and when uranium moves, it shoots. Like, it goes from 0 to 60 in no time flat. And so there's really incredible money that gets made in the uranium space when uranium goes on a run, and we are looking at that. That will happen in the next 3-year time frame. Prices are so inexpensive right now that there's actually not much downside in buying some exposure to uranium and just sitting on it, as long as you don't expect it to perform in the next year. You could just, establish your position, have some exposure, and wait for it to happen, because it will happen. Sort of the number of nuclear reactors that are being built in China and all around the world is more. They require more uranium than will be produced in a few years' time. So there's going to need to be some more uranium mines built. And current pricing for uranium, it went as low as $18 a pound, which is insane. It's currently at about $24 a pound. Not a single mine in the world makes money at current uranium prices. So one of Rick Rule's favorite lines is the cure for low prices is low prices, right? Yeah. And that's the situation that we're in with uranium. That cure will come to pass pretty soon, or at some time soon. So if you have a bit of a time frame available for your investment account, I would get some exposure to uranium and just be patient with it. It's not going to happen tomorrow, but it's going to happen, and it's going to happen in a big way.
Zinc and uranium, and possibly copper too, you mentioned. These are things we need to be looking at. Gold and silver is so popular, but you got to go where the opportunities are. And speaking of opportunities, if you haven't gone to resourcemaven.ca, you really need to check it out. Ms. Preston, thank you so much for your insight. We've had actionable ideas today just in this short time speaking with you. If people want to contact you, get in touch with you, or get your Maven Weekly, if they want to subscribe, how can they reach you?
Sure, yeah. At resourcemaven.ca, my contact is there. You can sign up for the free trial. You can sign up as a full-time subscriber, and I'm always available. It may take me a day or two to reply to an email, but I try to reply to every single email that comes in, so I'm always happy to talk stocks. It's what I do.
Fantastic, and you do it well. Thank you so much, Miss Gwen Preston, for spending time with me today. I really appreciate it.
Well, thank you so much for having me.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.